You may not know Tapestry, but you've certainly seen their handbags. Tapestry is parent to Coach and Kate Spade, two household names in the luxury handbag market. But the company's last few years have come with a bit of baggage.
Tapestry continuing its court battle with the Federal Trade Commission.
The FTC blocked Tapestry's multi-billion-dollar merger with Capri, owner of Michael Kors, in 2024. And the next year, Tapestry dropped its underperforming Stuart Weitzman brand. While the company still owns two brands, Coach has become its clear engine, generating nearly 90% of total sales. So how is Tapestry capitalizing on Coach's success while building back its full brand family? I'm Ruth Umo, and this is Fortune Next to Lead. Scott Rowe, CFO and COO at Tapestry. Thank you so much for joining us at the Fortune COO Summit. As I said already, you hold this hybrid role at Tapestry. Tell us, first of all, what is Tapestry?
Tapestry is a house of brands. We have Coach and Kate Spade. So we're in the leather goods business, accessories, and I would argue the best at it in the business.
Talk to me about what the corner of the retail market that you all occupy. What would you say is your competitive advantage at this point?
It really starts with the people and the great brands that we have, right? And we also, I think, are fortunate right now that we play in a price tier that is both luxury and aspirational, but also accessible, right? So if you did a bell curve and you think about where most of our product is priced, it's $200 to $500. So you think about how many people in the world can access that price point. It's massive. And I think one of the things we've done successfully is redefine what the market is. Not just people who bought handbags in the last year, but who could buy them? Share of wallet. And you think about expanding the TAM, the total addressable market, and think about all those potential purchasers and how you reach all those people. That's really been a redefinition of the way we think about the business, and it's been really successful.
I want to dig into that with a bit more granularity momentarily. I first want to look at your career history. You've held a number of roles in consulting, you've worked at industrial companies, you're now obviously in retail. On paper, those all seem like very different worlds. What is the through line here? What are some of the core competencies that were critical across those various roles?
Well, it's a lifetime, literally, right? As I think about the evolution. But I think curiosity is the one common thread. So I think I started in a traditional financial role, CPA, Ernst & Young, right? I got my foundational, grounding. I always say, as you think about leadership, you got to come from somewhere. You got to earn your seat at the table. And for me, that was financial competency, and that was the early years. And then I went into the next phase, I would say, was in heavy industry. So think about Alcoa, OEM automotive, basic materials, and that was heavily supply chain oriented. And I loved it, right? I would get on the floor, I would talk to the engineers and the production people, understand how our business worked, and it was really about efficiency and about driving to the highest quality and the best cost. Really interesting, really important, but I felt like something was missing. And the last phase of my career has been in the branded business, and specifically apparel, retail, accessories, and the branded side of the business, to me, is even more interesting than supply chain. So I have responsibility for supply chain, but in the context of a branded business.
You said you felt that something was missing before pivoting into retail. What was missing?
When you think about a branded business, it's just more complex, right? And also it's kind of fun when if I told you I made Portland cement, I don't think you'd get that excited. But if I tell you I make handbags and they're exceptional quality and they're very on trend, then it's just having a relatable product, for me, was more interesting. But also thinking about how do you build a brand and all of that complexity along with running a supply chain, it was just more interesting to me, frankly.
Before we started filming, we were talking about the fact that you lived in Switzerland for a number of years, in Lugano specifically. You lived there, you worked there. Do you think that in today's day and age, that global experience is still critical?
I really do. I guess context matters, but if you think about particularly US-based multinational companies, what I observe, and I was one of these, by the way, is the cultural understanding and the empathy of working and living in different countries generally doesn't exist. I think you've spent some time in Switzerland. You and maybe other places abroad, you can understand that very much. But I think it's also typically a big part of the growth agenda for companies, right? So if you're working for a brand or a company that has aspirations internationally, I can think of nothing better than getting the the empathy and the understanding of what it means to build a global brand and to work in, I don't care where you are, work somewhere that's not your home. So that you know what it's like to be the outsider, that you know what it's like to be in a meeting when you don't speak the language. When you look at some of the things that come out of the Americans and you understand the cultural, you're like, wow, that didn't play very well, did it? Right? Because it was so out of the context of the local culture. I think that's a really valuable skill as you think about becoming a C-suite leader at the enterprise level in a global business.
You spent about 25 years at VF Corp, if I'm not mistaken, and that is incredibly common today. When I look at Gen Z, when I look at millennials, they're constantly job hopping. One thing I've certainly noticed is that when you stay in a company for a long time, obviously you build up so much knowledge and experience, but it's also easy to have blind spots. So how do you ensure that you're adaptable and that you're on trend and you understand what is relevant to the modern day consumer?
You know, all the time I was in VF, I didn't really think about the outside perception. But when I decided to leave VF and even some of the board responsibilities I've had when we've been hiring people, it was funny to me that people saw tenure as a negative. If you'd been in a company too long, it's like, wow, I always thought of that in a positive way. But I think it's the point that you made, because sometimes you become stale or you only know one way of doing things. I think that's the risk. But if I think about my career at VF, it was so varied, right? We talked about Switzerland. It was different businesses, different parts of the organization, different responsibilities. So I woke up one day and it was 25 years, right? Because every job I had was different. I worked in different brands, different parts of the business, different geographies. I worked at corporate, I worked in divisions, I worked in brands. So it didn't feel that way to me, right? It didn't feel like one big company. Every piece or every new responsibility felt like a different job in a different context.
Were you proactive about seeking them out, or passive in that they just kind of fell into your lap, if you will?
You know, I would love to tell you I had this master plan, and this is, it's funny, I really didn't. I just did the next thing, right? And I guess I did a good enough job that I kept getting promoted and getting opportunities given to me. But I always just had the mentality, if it's offered, and it makes sense, take it, right? And take risks. Moving overseas with 4 little kids and a very patient wife was not easy. Fortunately, she was my partner in this and said, let's go. And I would say that was probably the part of my career that propelled me to the C-suite, because it was incredible growth. It was a lot of complexity. I really built my brand as an international leader and as somebody who was a growth-oriented leader, and I think that had a large part in my promotion to CFO.
I'm sure after 25 years at VF, moving to Tapestry was a risk. You've been there for 5 years now, but what was the initial call and what drew you to this company?
You know, I really had 3 things that I looked at, or I still look at, right? And those are the things that ultimately drove me to make the decision to come to Tapestry. One is trust and respect of the people that you work with. You got to feel good about that. The second was I knew that we were in a time of profound disruption and change, right? The consumer behavior, the channels, digital emergence, et cetera. I wanted to be at a place where the case for change was understood, and we would debate maybe the tactics on how we were going to address it, but don't play the old book, right? Don't play the old song, because it's changing. And that was really important. And I wanted to see that we were going to be innovators and continue to evolve. And the last thing was, is it winnable? And is it winnable as an enterprise? I looked at Tapestry, the great brands, the leadership team that had been assembled, and I said, I think we have asymmetric upside. I think this business is undervalued, and this is a great opportunity for growth, both financially and as a company. And also personally, was it winnable for me, right? Do they need what I do? Are my skill sets relevant to the strategy of Tapestry? So obviously I answered yes to all those 3. Today is my 5-year anniversary.
Congratulations.
Believe it or not. Thank you. Can't believe 5 years goes so quick. And, it's been a very successful time in Tapestry's history. We've demonstrated the ability to grow as a business, and we've dramatically improved from a financial performance standpoint.
You now hold a dual CFO, COO title. Which role came first?
CFO.
CFO. All right. So now you're wearing two hats as both CFO and COO. Have there been moments when the finance side of Scott wanted to be cautious while the operations side wanted to invest and to move faster? And how do you work through those seemingly competing instincts?
Like the little devil and the
Yeah.
angel kind of competing on my shoulders. Of course, I mean, that tension is always there. But listen, as CFO, I'm actually interested in growth, and growth takes investment. So it's not so much do we want to invest or not. I would say where I spend more time is that investment going to have the scale and the impact? Is it commercially relevant to what we're trying to do as a company? So
Give me a for instance.
Example, right? There's a tendency, especially in big organizations, to want to do a list of things, a lot of things. But do you really differentiate and say, yeah, but show me the commercial impact of that? We use some internal ways to size the prize, XYZ, ways to think about if X number of people do Y thing, then Z happens, right? So as you think about, if I'm successful and if this time and investment that I'm making works the way I think, is it going to move the needle? Is it going to matter? And so I think that's uniquely where those two jobs come together, because I'm going to oversimplify. But the COO many times is executing against strategies that have been aligned upon. But as CFO, I feel like it's also my job to say, yeah, but so what? That's my favorite question, actually. So what? If these things become true, what changes? What's different because we did this? And that, I think, is where those two uniquely collide.
You've kind of touched on this, but let's dig in more. What becomes easier when the person responsible for the numbers is also close to the operational realities behind those numbers?
Is the,
you didn't start
is
off
the
as the
fox
operations chief.
guarding the hen house?
Right,
Is some
right.
version of that? Well, again, I think once we all, I'm going to use the analogy I used earlier, we all earn our seat at the table from somewhere, but we're all business people at the end, and we all have the same goal and the same objectives and accountabilities to drive the business forward. So I view it more on how can I, as both COO and CFO, how can I enable this initiative, whatever it is? I need to make sure it works in the context of our guidance, if I'm as a CFO, and our financial algorithms, and can we afford it? Do we have the cash flow? All those kind of things. And as COO, do we have the ability to execute and deliver on this initiative that hopefully, if we did our job, is also relevant and commercially going to move the needle, right? So that it all kind of works, I guess, in concert with each other.
Well, let's talk about some of those commercial efforts and just adapting to change. A couple of years ago, as you certainly know, Tapestry announced plans to acquire Capri Holdings. That could have brought in names like Versace, Jimmy Choo, Michael Kors. That was blocked by the FTC in 2024. Last year, you then decided to sell Stuart Weitzman. It was underperforming. The blocked Capri acquisition and the Stuart Weitzman divestiture, they seem to point in almost opposite directions. One toward expansion, the other toward simplification. So my question for you is, what did those two experiences teach you about where scale creates value and where focus creates value?
Yeah, it's a good question. And as we think about portfolio makeup and construction, we have a 4-lens framework, and I won't bother you with going through all 4 lenses. But the first part of that is, what do we uniquely bring as a company to add value? And when you look at the Capri business, which really Michael Kors is to Capri what Coach is to Tapestry in terms of size and relevance, I think you would say the industrial logic is unassailable, right? These are businesses that are in the same categories. We have deep institutional knowledge and capabilities, and the synergies. It makes a lot of sense. If I compare that same method of evaluation to Stuart Weitzman, it was shoes. It's a great brand. It's nothing wrong with Stuart Weitzman. But what do we bring as an owner that we uniquely can bring? And premium footwear is not a deep competency, nor is it a TAM, going back to things that are meaningful, that is large compared to what we see in the rest of our business. So from a strategic standpoint and consistently applying the way we think about portfolio construction, actually they do make sense.
Let's talk about Coach, which is clearly the standout performer right now. I mean, even living in New York City, I see so many people across generations with Coach wear, Coach bags, Coach wallets. Kate Spade has had a bit of a tougher run. So what gives you the confidence that Kate Spade still has a distinct role in the Tapestry portfolio?
You know, as I think about Kate, it's a unique brand that is positioned in a total addressable market that is both large and compelling. And we happen to know something about it, right? In leather goods, going back to that earlier conversation. So, first of all, if not us, who, right? I mean, we have deep understanding of this category. And when I look at the longer term, this is the irony of Kate. The longer your view, the more confidence that I have, right? I know this is a compelling brand in a compelling category. What's harder is in the short term, we know that as we've continued to transform the brand to play the Coach playbook, we see that more transactional, price-oriented consumer, they're moving away from the brand. We're starting to attract that high lifetime value Gen Z consumer. The convergence of those two are the short-term sales trend, right? That's harder to predict. But when I look longer term, if I zoom out a click and I look at the relevance of the brand and the attractiveness of the market, that's where the confidence comes from.
Perfect segue, because we're hearing a lot about a K-shaped economy where higher income consumers, they continue to spend while others are pulling back. They're becoming, as you said, more price sensitive. How is that changing the way Tapestry thinks about its products, its pricing, and also where it sells them?
Well, it's interesting. Certainly, we understand and see the same data on the K-shaped economy. A couple things I would say. Number one, we have invested and really remade our business model over the last 5+ years to focus on brand engagement. And we believe that people buy brands and choose products, right? So we have quadrupled really our investment in marketing, and we have really focused on the strength of our brand. The reason I bring that up, that coupled with the fact that this category is very resilient. The handbags, it's both utilitarian and it's an emotional purchase. So the combination of strong brands and a structurally attractive category, I think, is one of the reasons why we really haven't seen the pressure. In fact, you've seen our results, right? We're growing at a time when others are struggling, and I believe it's because we're bringing compelling product at a price point that makes sense on the price value, and we've got strong brands that are resonating with the consumer. That combination so far, it doesn't make us immune to the macro issues, but we really haven't seen the pressure that many have talked about with the K-shaped economy.
Coach has been on this upward climb, this upward trajectory. What's driving that? Is there a particular consumer segment? I mean, what is it? What's the catalyst there?
You know, there's, and again, I've been doing this for a while, right? So I've been in this industry. I think what we have here at Tapestry and at Coach is a unique combination. We talk about magic and logic. And the magic part is at the Coach brand, Stuart Weavers and the creative process, which has been in the brand for a long time, right? But we've added with that the logic, understanding the consumer and putting the consumer at the center of everything we do. And we own this data. We're 90% direct to consumer. We own first party data, and we're learning how to use those insights. So put all that together, we've got a very exciting luxury product that we're delivering exceptional value, but we're also opening the aperture. We're talking to a lot more people, as I said earlier, right? We're acquiring new customers. So why are we growing? Why are we seeing this success? Number one, the products are resonating, the brand is resonating, and we're seeing that people are coming back and repeating purchase and even going up the chain. They're buying more high value products. And most importantly, we're attracting new consumers, 2.4 million just this last quarter. And those consumers are increasingly younger. Gen Z is about 40% of what we acquired in the last quarter. So that's the flywheel, right? We're reinvesting back in the brand. We're acquiring new consumers. We continue to see our AUR, average unit retail, improve because we're delivering innovation, which is resonating with the consumer. So the combination of AUR and unit growth is a winning formula, and we're reinvesting back in it. That's that flywheel.
Anything you've learned about Gen Z consumers and shoppers in particular that you found particularly surprising or unique to that cohort?
Yeah. I'm actually going to answer your question a little bit in reverse because I think there's some myths that, one of the things I hear from many people, investors or media, is, wait a minute, you're targeting Gen Z, aren't they fickle? And the reason people say that is logical. If you looked in a Gen Z's closet today compared to 10, 20 years ago, they've got more brands. But it's not because they're less loyal, it's because they have more choices. So that is a really important insight. So why did we quadruple our marketing? Because we got a breakthrough. They have more noise than they've ever had, right? And so the lazy analysis, I would say, is that they're more fickle. We would say, you just got to reach them. You got to break through, and you got to have the reach and the ability to do that and still be profitable so your investors will stay with you. That's what we did over the last 5 years. So we're an overnight sensation, 5 years in the making, right? As we
The marketing is primarily through social media?
Well, digital channels,
digital
right?
channels.
So we have kind of a constellation approach, but certainly, yes, social influence is a part of that. But yeah, most all of our communications are in digital format.
Can't have a conversation about business without touching on AI. How are you thinking about that technology? How are you leveraging it internally?
I think it touches virtually everything we do. And we kind of look at AI in two major buckets. One is, I would say, enterprise initiatives or outcomes that are enabled by AI. Because AI can process metadata in an instant, it can do things that humans can't do. So we're using that to develop insights on business trends and feedback loops that are very powerful and are helping us make better decisions. I say that's the alpha value that we create. If we can make a little bit better decision, we can reduce fashion risk and we will outperform all of our competitors. And then there's what I would call just the general upskilling of the organization. The way we think about a consumer journey is in three phases: see, think, do. So you got to be aware, that's the see phase. The think is I consider it. I'm now learning, tell me more, I want to understand more. And then ultimately do, in the case of our product, is you buy it, right? That's the new customer acquisition. Put that in an AI context. We have made the decision right now to make the best tools available within a very controlled and safe environment, by the way. Enterprise, our own segregated data. We don't put it out on the web. But we've given relatively free access to our employees so that they can understand and develop these skills. And we're increasingly working on the education, ultimately with the idea that all of our employees and our leaders of the future are going to have to be AI fluent. Right? And so we're trying to generally upskill them. I would say that's an area of great debate because it's kind of a carrot and stick. And how do you think about that? A lot of people have different points of view. We've said AI for us is not about efficiency. That's a byproduct. It's about growth and driving growth. And that's where we've focused our efforts. There's a lot of people that would disagree with me on that position, and maybe they're right, we'll see. But we're continuing to evolve. One thing I know for sure, though, is AI is changing everything. It's changing the way our consumers behave. AEO is now it is a reality, and it's becoming a bigger reality over time, and that has a lot of implications through the organization. So we're spending a lot of time thinking mostly about the consumer in the center. How are they evolving? How is their behavior evolving? And then how do we meet that challenge and make sure that we're staying relevant in a new way to shop, if you will?
Let me ask you this and play devil's advocate for a bit, because you obviously ascended into the C-suite in the pre-AI era. There's certain core competencies and capabilities and uniquely human judgments and instincts that you can't get if you're overly reliant on AI. Any concerns that some of those capabilities will atrophy, let's say, with the next generation of leaders?
Yeah, it's a great question. I guess the honest answer is we don't know.
We'll see.
Right? We don't know. One thing I know for sure, so maybe this will sound anachronistic in a few years, but I do believe, and our philosophy so far has been a human in the middle, right? And we think about, what so far at least, where we really, take my experience or a buyer or a planner or anybody in the organization, training the AI, building the semantic layer is where you impart that knowledge. And that is always backwards looking, but that will continue to evolve. And I see, at least for the foreseeable future, the need for humans to define both the strategies, the outcomes we're trying to drive, and ultimately what success looks like, because that's the most relevant thing. You know, AI can be a hammer looking for a nail. I see so many initiatives out there. Oh, we're doing AI this, AI that. And I always say, to what end, right? What business outcome are you trying to drive? And AI is not a destination, it's an enabler, right? And so how do you think about AI in the context of what you're trying to achieve? And going back to that earlier conversation, is what you're going to achieve meaningful? Because there's a lot of pet projects out there. And that's probably the biggest battle that I see between CFO and COO is how do we make sure that things that people have great passion for, you don't want to stifle that, but by the same token, I say, if you're wildly successful, it won't matter. So we got to make sure that we're spending our time and efforts on things that are really going to matter and be commercially relevant. I think that's the biggest challenge for us at this point.
Last question on the topic of AI. Tapestry is invested in Mira, your AI platform that connects data across the businesses. As CFO, certainly as COO, how do you evaluate these AI investments like Mira?
Mira is our patented AI solution that kind of sits on top of our patented data fabric. And I think we are building a true moat in terms of our ability, again, to use all that first-party data, analyze it, and get better insights more quickly to drive our business. We're not actually spending a lot of money on AI. So we have the subscriptions where, you know, the token usage, all that, we look at it. But most of our tech debt is behind us as a company. So to me, it's not as much about the money we're spending, it's more about the time we're spending. And it goes back to that earlier. Are we working on things that are relevant to the strategy, that are relevant to our consumer, that are going to move the needle? That is the bigger issue for us. We're not a hyperscaler. We're not building multi-billion-dollar data systems or having to build a nuclear plant to power it or anything like that. So at least so far, the investments haven't been that significant. It's more about share of mind and time and efforts, prioritization.
Let's end with these two final leadership questions. What's the best leadership advice you've ever received?
So we're on camera, right? I don't know if that translates. When I first moved into the C-suite, the CEO at the time, Eric Weitzman, who had been a mentor of mine for pretty much through my career. We had worked together for quite a while, and he said, "Scott, I'm going to tell you, the hardest thing for you to do now is be happy with indirect wins, because you're no longer the person doing the job. You're the person assembling the teams and creating the priorities and holding people accountable. But you got to be happy with secondary wins or second, party." And I've always took that to heart as a leader too, because if you think about pushing praise down but accepting responsibility yourself, when you stand out in front of the group and say, "Hey, this failed and it's on me," I'm creating psychological safety for my team. They know I got their back, and they know that I'm not out for myself. I'm out for the team and for the good of the team. But when something goes well, I want to talk about what they did, right? And again, people respond to recognition, and you want to be relevant in your job and in your business. And when they did something great, why should I take credit for it? They did it. Now, I get some indirect benefit from that, right? It's my team, and we did something good, hopefully. But ultimately, that advice, I think, has been one of the most impactful. It has implication in the way in which I lead and the way I think about leading.
Well, we'll end here. Fortune's MO has always been about tracking power within the Fortune 500, Fortune 1000 companies. I think political capital is one of the least discussed but most decisive factors when it comes to corporate advancement. What's something you've learned about navigating power and getting alignment inside a global enterprise that you wish rising leaders or even yourself understood earlier?
I was just having this conversation actually with a colleague recently, and I think the thing that I've learned over time, we all think of ourselves as low ego, high impact. At least that's what I'd like to think. But in a corporate environment, you also have to self-advocate, and you have to build your brand. And so one of my most common questions is, what is your brand? What are you known for, right? So if I think about my old job, my last job, when I was coming to Tapestry, what's your brand? I said, I'm an M&A guy, I'm an international guy, and I'm a growth guy. And I develop teams, and I have a long list of people I put in the C-suite. That was my brand, right? And so what is your brand? And how do you communicate that? And it doesn't mean bragging, and it seems maybe counter to what I just said in terms of pushing praise down. But every so often, stick your head up above the trees and say, hey, let me remind you what we accomplished, or let's do it. Let's look back over the last year. And I think you have to make sure that people understand your relevance and your contribution. And I would say, if I'm honest, that's something that I undervalued over time, probably because I was in a company for a long time and I kind of had the reputation and I'd built it over time and I didn't have to think about it. But as you change jobs and you come into a new role, you got to think about that, right? Because you're just Scott off the street when you walk in the door, right? And you got to think about, okay, I gotta let people know what I do and how I bring value and how that's relevant. So I would tell people, don't be arrogant or whatever, but just make sure people know what your priorities are, what you're contributing, and what the results have been. And it's another great opportunity to see, are you aligned with the organization? They say, well, that's really interesting, Scott, but we don't value that. Oh, well, maybe I should know that, right?
I think that's a solid place to end. Scott Rowe, thank you so much for a robust and insightful conversation. Really such a pleasure.
Thank you. I really enjoyed it.